Zerodha and Small Case are coming together to change India's mutual fund industry forever. And also the way you invest. They're taking on the old mutual fund mafia of 40 plus funds controlling billions of Indian rupees. The biggest stockbroker and an innovative Indian investec company joining hands is a very big deal. But sadly, the news media has only reported it as a general joint venture. But trust me, this is too interesting of a story to not go into the depth of. So in this episode of Wireframe, we look at exactly how Zerodha is going to use this opportunity to unlock its next phase of growth. How it has a proven model of Vanguard in the US to look at. How Zerodha and Small Case are beautifully positioned to disrupt the Indian mutual fund industry. And also how to change the way Indians look at investing in general. Oh, also we spoke to the ex-CEO of Navi Mutual Funds here to give us interesting insights on what's really up with the industry. This is going to be a very interesting video. We'll deep dive with 7 exact steps that will work in Zerodha's favor here. So let's dig in. To understand why the Zerodha and Small Case joint venture is a big deal, we need some context about the Indian mutual fund scene first. See, net, there are two types of mutual funds that exist. Active funds, as we know, are funds that are actively managed by a fund manager who takes calls and buys and sells portfolio stocks to create a certain performance and returns. Whereas passive funds are super simple. They track an underlying index. For example, the Nifty 50, which means you can invest in the top 50 Indian companies for just Rs 500 baby. And the fund will automatically buy or sell shares depending on the proportion of the market size captured by these top 50 companies. Now the big deal here is that passive funds are clearly the future.
I'm personally a very strong believer that passive investing will work or grow in India very well. The major reason is the whole simplicity behind the passive investment products, right? Products like FD, where people don't have to think much, will have the maximum traction. And passive investment is also like that. You don't have to think much about, who is managing my money, why this NAV is going up and down, is because of the passive investment. People understand that it broadly follows a particular index, right? So, jitna upar jayega, niche jayega is how your money will, the investment will also move.
Indians clearly have an eye for passive investing now, because as we understood, they are just simpler to understand. The assets under management for passive funds has gone from 1.5 lakh crores in August 2019 to 5.9 lakh crores in August 2022. But surprisingly, only about 14% of all Indian investments are made in passive funds currently. To give you context, this number is more than 50% in the US, and this is where Zerodha and Small Case come in. Their idea is super simple. They don't want to make a complex investment product. They want to create a passive mutual fund for Indians and basically replicate exactly what Vanguard did in the US. And here is where it also gets fascinating. Vanguard is like the Amazon for investments in the US. So let's dig a little deeper into what worked for Vanguard and what can Zerodha and Small Case really learn from it. Vanguard took in more money on a net basis than any other mutual fund in the world, with about $8 trillion in total global assets under their management. And if you look at the pie of the largest mutual funds in the US, Vanguard takes away 4 spots just like that out of the top 5 by total AUM. But how did they really do it? Of course, they got a lot of things right. But one of the biggest reasons of their success was just this. They pioneered the rise of passive investing strategies, even marketing the first ever index mutual fund in 1975 in the US. They were able to offer funds at rock bottom prices compared to any other mutual fund firm out there, because these funds employed teams of analysts and star stock pickers to identify investments. And because Vanguard had no active fund manager, it by default was a low-cost investment option with a 0.2% expense ratio compared to active funds, which charged commissions up to 2 to 3%. And here's a bigger thing. While they scaled, they also kept driving prices lower, which helped them build unprecedented brand loyalty. Enough context set. I think you would have gotten a picture of what Zerodha really has in mind when it comes to Vanguard, but for the Indian mutual fund space. Here's the juicy bit. Let's dig into the 7 steps by which Zerodha and Small Case plan to really disrupt the massive mutual fund space. First, their user-focused approach. Think about it, right? Most users don't really understand indexes or the right markets to invest in. And most investors are not financial gurus. Almost all of them get their gyan from financial influencers today. But most Indians do know an ideal retirement age. It could be 60, 65 or lesser for new age Indians like us. And with a retirement age goal in mind, they also have some idea about the amount of money they need by a certain age. For example, take 10 crores by the time I'm 60, or 20 crores by the time I'm 70, or 100 crores if you are Elon Musk. Something like that. And this is where Zerodha and Small Case are filling in the white space. With their fund, they're introducing a passive fund focused only on retirement. So basically, the fund could be called something like Roadmap to 2060, and you could keep investing in it, making sure you invest enough and earn enough returns by the time you reach 2060 and are ready to retire. And this is a supremely user-focused approach. So Zerodha and Small Case's first advantage, they're simplifying investing to the core. Second, Zerodha's Apple-like ecosystem. Zerodha is the largest stockbroker in the country with over 6 million active clients. And with this, they are about 18.3% of the total broking market. Compare this with Upstocks with 5 million clients, Grow with about 4 million, and so on. Now, all of these 6 million active users are on Zerodha to invest and trade, or they use their Zerodha account to log in on products like Small Case and use Zerodha as their broker. Now imagine, with investment opportunities available right inside the Zerodha ecosystem, their literal friction to invest goes away. You can also think about it like how YouTube does it. Because you have a frequency to watch YouTube videos and spend hours on the app, why not also use YouTube to listen to music? And okay, while you're listening to music, why not also react to an Instagram-like community post on your feed? You see, this is how you create complementary products to keep increasing your total addressable market of users, or bring existing users deeper into your ecosystem. Which is what brings us to the third point, which no other broker quite controls like Zerodha: trust. If one thing stands out with Zerodha, it's trust. It goes from the minimal design of their app, their product experience, caution nudges when investing in high-risk stocks. No other stockbroker does it quite like them. The entire Zerodha experience is built for high trust. Now, partnered with Small Case, where Zerodha is also an investor, by the way, they will leverage the already built up trust to get new and existing users to buy in instantly. Fourth, Kite becomes an acquisition hook. Zerodha's main product, and this is what you use primarily, is Kite. Is a trading portal via which you make all your investments. Most users, when they come to Zerodha, they're actually coming in to use Kite, by the way. Also, interestingly, Zerodha has a negative CAC, which means a negative customer acquisition cost, because primarily they don't spend anything on marketing and charge their customer on top of that 200 rupees to create an account. So with the launch of their mutual fund, Kite essentially becomes a negative CAC acquisition hook for Zerodha and Small Case. This by default creates a massive top of the funnel for their fund. It is a dream position for any asset management company to be in. Fifth, Indians don't like paying. Think of your to pay for Netflix or Hotstar Premium or concierge service at the airport. The same is for investments. Currently, mutual fund investment houses are known to charge an expense ratio, basically their commission, of 2 to 3% on average. With this fund, Zerodha wants to bring this expense ratio down to 0.1-0.2% into. Now, thanks to not being run by an active fund manager, they can in theory bring down this cost. And like Vanguard did in the US, this could really work in India. Now, Indian investors don't really care for expense ratios also. Think about it, right? Like, when was the last time you made an investment decision based on expense ratios? And like compare expense ratios between two funds. But you do care about overall returns and simplicity in what you're investing in. This is the Zerodha spin. Sixth, comfort in clutter. See, the Kawat brothers are no aliens to paving their way in a crowded market. Look at what they've done with Zerodha. They own 18% of the broking market without any IPL ads, paid marketing or anything like that. And the mutual fund industry seems like a crowded space for sure, with 40 plus asset management companies. And they all together run a confusing maze of 1700 plus open-ended and close-ended schemes. But it's clear, Zerodha wants to stand out with one simple value proposition: passive investing for retirement. This is their moat. And seventh, passive is just starting in India. There's a massive white space here. India's passive investing industry, as we saw, stands at nearly 15% compared to 50% or more in the US. But just to give you context about what's really happening in the financial markets in India, take Bajaj Finserv, Helios Capital Management and Old Bridge Capital Management. All of them have received in-principle approvals to launch their mutual fund in India. Further, Wise Market Analytics, Angel One, MK Global Financial Services are amongst 7 entities who have in-principle approvals in consideration with SEBI. Also notably, the late Rakesh Jhunjhunwala's Alchemy Capital Management is also in the running for a mutual fund license. And there you have it. These are 7 things that Zerodha and Small Case will leverage to make a mark in the Indian mutual fund industry. The $440 billion asset management market seems ripe for some passive disruption. But will Zerodha and Small Case be the people to do it? We shall see in a few days.